Okay, so you're here because you're thinking, can I, realistically turn some crypto into $1 million in like just a month?
Well, let's just say the stuff we've been reading, this pasted text, right? It's pretty blunt.
Yeah.
It basically says, forget investing. Think more like high-stakes gambling. Yeah. The odds are, well, not in your favor.
So no secret formula then? No like easy path to riches?
Not from what we're seeing. But hey, that's why we do this deep dive, right? We're going to break down these honestly kind of wild strategies, see why they're so unlikely to work, and hopefully you walk away with a better sense of how crypto investing actually works.
All right, so first things first. You need a decent amount of cash to even start, right? This isn't like tossing spirit change into a wishing well.
Exactly. You're looking at maybe tens of thousands, potentially, to have even a sliver of a chance.
Tens of thousands, wow.
It comes down to percentages. A huge gain on a tiny investment. Still tiny. You need a solid base if you're hoping those, let's be honest, improbable gains turn into serious money.
And then it gets into some, well, pretty intense tactics. This whole thing about leverage trading on what they call microcaps.
Ah, yes, the microcaps. These are cryptocurrencies with a really small total value. Their prices are super sensitive, like one little breeze, and they're soaring or plummeting.
Makes sense.
So the strategy, it goes like this. You find a microcap that's either just jumped in price or there's something big about to happen. Maybe it's getting listed on a major exchange or, oh, there's this huge social media buzz rate. You're trying to catch a wave.
Right in the wave. I get it.
But then here's the kicker. Leverage. We're talking 50x, 100x leverage.
Whoa, hold on. Explain that, because I know it's not as simple as it sounds.
Basically, you're amplifying your potential gains, but also your losses. It's like, imagine you bet $10, but with 100x leverage, it's suddenly like you bet 1,000.
So price goes up, you win big, price goes down, ouch.
Exactly. The text really hammers this point home. Perfectly timing the market, buying at the very bottom, selling at the absolute peak, almost impossible.
Yeah, I can see that.
With that crazy leverage, even a tiny dip can wipe you out. It's called liquidation. Suddenly, your whole investment, gone.
Okay, yeah, I'm starting to see why this is so risky. And then there's this whole other thing with IDOs and ICOs. Initial, what were they again?
Initial DEX offerings and initial coin offerings. Think of them as like brand new crypto projects just hitting the scene. They're all hyped up, promising the moon. And the strategy is to buy in early, right at launch, hoping the price explodes.
And then you sell quick, right?
Boom, cash out, ideally. But this is where things get even sketchier. The source specifically warns about rug pulls. It's basically the project team takes everyone's money and vanishes.
Oh, so not only are you trying to time the market, you're also trying to,
Yeah.
like, guess who's going to run off with the cash?
Pretty much. It's, not for the faint of heart.
All right, so we've got leverage trading, IDOs, ICOs. There were a couple more things in the pasted text. What about arbitrage and flash lumps? Those sound like something out of a movie, honestly.
They're definitely more on the advanced side, yeah. Arbitrage is about finding these tiny price differences for the same cryptocurrency, but on different exchanges. So you buy low on one, sell high on the other, and pocket the difference. Sounds easier.
Right. But there's got to be a catch.
You need a lot of capital to make it worthwhile. And it has to happen fast, like in the blink of an eye. We're talking specialized software, algorithms doing the trading for you.
Wow. Okay. And flash loans?
Flash loans are even wilder. It's like borrowing a huge amount of crypto without any collateral, but you have to pay it back within the same transaction. So you find a big price difference, borrow the crypto, buy low, sell high, repay the loan, all in an instant. You need to know the market inside and out and probably have some serious coding skills.
Okay, so those are the tactics. Pretty high risk, high reward stuff. But the pasted text is also really clear that actually making $1 million in a month is not going to happen.
It's like astronomically unlikely. Crypto markets are volatile, impossible to predict with any certainty. And that leverage we talked about, it magnifies losses just as much as gains.
Right, right.
And then you've got scams, people manipulating the market, these whales, they call them, who can move prices with huge trades. And don't forget, regulations always changing, adding to the uncertainty. Oh, and competition. You're not the only one trying to pull this off.
So if I'm hearing you right, this whole idea of turning a little crypto into $1 million in a month It's like winning the lottery, but multiple times in a row.
Yeah, that's a good way to put it. But it's fascinating, right? This whole idea of taking massive risks for a shoot at huge rewards, it makes you think about investing in a whole new way. Like, what's the balance between potential gains and the very real possibility of losing it all? That's something everyone should consider, whether they're into crypto or anything else.
Food for thought, for sure. Thanks for diving into this with me.
Anytime. Always fun to explore the wilder side of finance.
Absolutely. See you next time on The Deep Dive.
See ya.